Hello guys and welcome to our presentation. Today we are going to deliver you a business performance analysis of Fresenius. We're going to take off with the company overview and the Fresenius business model to later go on with the financial analysis, SWOT analysis and the outlook of the company. Fresenius is a global healthcare group offering high-quality products and services for dialysis, hospitals and outpatient treatment. With over 290,000 employees in more than 100 countries around the globe and annual sales exceeding 35 billion euros, Fresenius is one of the world's leading healthcare companies. Fresenius's portfolio includes a comprehensive range of high-quality healthcare products and services as well as various dialysis treatment options for both in-center and home dialysis. Presently, the company operates in 4 business segments, all of which are positioned in promising growth markets within the healthcare industry: Fresenius Medical Care, Fresenius Kabi, Fresenius Helios, and Fresenius Veimed. Fresenius Medical Care is the world's leading provider of products and services for people with chronic kidney failure. Around 3.5 million patients worldwide with this disease regularly undergo dialysis treatment. Dialysis is a life-saving blood cleansing procedure that substitutes the function of the kidney in case of kidney failure. They care for more than 350,000 patients in a global network of more than 4,000 dialysis clinics. At the same time, they operate 45 production sites in more than 20 countries to provide dialysis products such as dialysis machines, dialyzers, and related disposables. Fresenius Kabi supplies essential medications, clinical nutrition products, medical devices and services to help patients suffering from chronic illnesses. Fresenius Kabi is a global healthcare company that specializes in life-saving medicines and technologies for infusion, transfusion, and clinical nutrition. Their products and services are used to help care for critically and chronically ill patients. Their product portfolio comprises a comprehensive range of IV generic drugs, infusion therapies, and clinical nutrition products, as well as the devices for administering these products. In the field of biosimilars, they focus on autoimmune diseases and oncology. In 2019, the first biosimilar product by Fresenius Kabi was launched. Within transfusion, medicine, and cell therapies, Fresenius Kabi offers products for collection of blood components and extracorporeal therapies. Fresenius Helios is Europe's leading private hospital operator, with more than 110,000 employees. Fresenius Helios owns and operates Helios hospitals in Germany, as well as Quirónsalud hospitals in Spain and Latin America. Every year, about 21 million patients opt for medical treatment at the Fresenius Helios hospital. Both Helios and Quirónsalud are the largest private hospital operators in their respective national markets. The 86 hospitals across Germany operated by Helios include 7 maximum care facilities in Berlin, Duisburg, Erfurt, Krefeld, Schwerin, Wiesbaden, and Wuppertal. Helios also operates 123 medical care centers and 7 prevention centers. Every year, around 5.6 million patients are treated by Helios in Germany, 4.4 million of them outpatients. Almost 69,000 people are employed at Berlin-based Helios. Quirónsalud operates 51 hospitals, 71 outpatient centers, and some 300 occupational risk centers. Around 15.4 million patients are treated here every year, 14.6 million of whom are outpatients. Active in every major metropolitan region in Spain, and now with 5 hospitals in Latin America, Madrid-based Quirónsalud has about 37,500 employees. Finally, Fresenius Veimed plans and develops healthcare facilities. Fresenius Veimed manages products and provides services for hospitals and other healthcare facilities worldwide. The portfolio ranges along the entire value chain, from project development, planning, and turnkey construction via maintenance and technical management to total operational management. This range of competencies enables Veimed to support complex healthcare facilities efficiently and successfully at each stage of their life cycle. As a specialist provider of a full spectrum of services and being active worldwide, Veimed holds a unique position. The company has successfully completed more than 960 projects in 95 countries. Fresenius has implemented a concentration strategy through vertical integration. The healthcare company owns and controls relevant, important value-added activities ranging from dialysis-focused research and development to medical devices, dialysis and infusion treatments to the company's owned hospitals in Germany and Spain. Fresenius Veins specializes in planning and management of small and large healthcare facility projects for other firms, which are amongst others also organized as turnkey projects. Reports on the patient's illnesses collected at the firm-owned hospitals can be used for the company's own research and development. Altogether, this concentration strategy contributes to make Fresenius globally a leading firm in dialysis treatment.
So before I start with going into the financial analysis, I just want to give you a quick overview of Fresenius strategies. So Fresenius managed a diversified portfolio of healthcare businesses that creates value, and their goal is to strengthen their position as a leading global provider of products and therapies. Therefore, Fresenius has defined strategic priorities to pursue its goal and to strengthen the position of the companies. Those being in those core competencies, innovation, improved profitabilities, drive internationalization, quality, and employees. So starting with the financial analysis, Fresenius declared in their annual report that 2019 was a year of investment and that in the 16th year in sequence, they're reaching their goal in terms of driving sales and net income. Also, they reported a growth in revenue of 6% and a slight decrease in net income due to an adverse situation of the Aecon acquisition that went wrong in 2018. But they were willing to accept a little less financial success in the short term, according to their shareholder letter, in order to secure growth in the future. But what we can also see is that they're doing high investment, which due to the higher investment, they still managed to keep a rather good equity ratio, which indicates that they have a better long-term solvency position and have to pay less interest, thus having more free cash on the hand for future expansion, growth, and dividends payout or dividend increase. But in order to see how successful and profitable they really were, we compared Fresenius to its two main competitors, which being Baxter International, which develops and provides a portfolio of healthcare products, and DaVita, which provides kidney dialysis service. All are from the same healthcare industry field, and from both companies are from the US. If we look at the net sales over the last 5 years, we can see that Fresenius has recorded high sales compared to its competitors, but also double the growth rate than its competitors, which is a good indicator at a decent rate, but while recording a growth rate of 6%, and they managed to become even more profitable. When we look at the EBIT margin, which is Fresenius is indicated by the blue line, we can see they have a good and steady position, although in 2019 it recorded a slight decrease in its EBIT margin due to more employees, more cost in research and development compared to Baxter and DaVita, and Baxter and DaVita doing slightly better, which is probably also due to less investment compared to Fresenius. Further, if we look at the net income over the last 5 years, we can see that Fresenius earning have a growth rate about 7%, which shows they're being profitable or becoming even more profitable. It's slightly higher than their sales growth. But if we compare it to DaVita, it's not as good, as DaVita has a growth rate 3 times as high, which is pretty impressive. Saying that 7% as a net income growth isn't bad, but it could be better in comparison, like we can see with DaVita. If we compare the financial position of all 3 companies, we can see, and also look at their at the balance sheet, we can see that for Fresenius and also for DaVita, the same applies as I'm saying right now. So their short-term assets exceed their short-term liabilities, but they are not cover its long-term liabilities. Whereas for Baxter, their short-term assets are able to not only cover their short-term liabilities, but also their long-term liabilities, which we can see as Baxter being financially a bit better off than Fresenius and DaVita. If we further have a look at the debt to equity analysis, we can see that all three companies have high levels of debt and a high debt to equity ratio. DaVita even is really high, and I had to look it up if it's really real, but we don't know. It's really risky for them. They're close to, I would normally say, to bankruptcy, but at the same time they're able to cover their debt well through the operating cash flow. So why do they have high levels of debt? That's the question here. But if we compared, Fresenius is also doing really good because their debt is covered fairly well by 22% of the operating cash flow, and as well as able to cover their interest expenses by almost 7 times from their EBIT, which is not bad either. Better than DaVita's debt for sure. But overall comparison, if we have a look, if we compare them all, Baxter is the winner out of the debt to equity analysis here, and is just slightly doing better off than Fresenius. Also, if we have a look at other ratios, we can see that Fresenius, especially acid test ratio, is relatively low with 0.7. Normally a good ratio is around 1. Everything below could have an indicator that they're not being able, or they don't have enough liquid assets to pay their current liabilities. But also, as we can see, that the quick ratio is much lower than their current ratio, which could be an indication that they are highly dependent on inventory, which doesn't make sense, which is in contrast with the high inventory turnover as it lies for at 7.2%. 7.2. Further, if we have a look at the return on equity and return on assets, it's relatively low compared to Baxter and DaVita, and they could do better on that as well. Overall, I can say though that Fresenius market position is good, and especially in 2019, in comparison to its competitors, it could have been better. This is probably due to the year of investment and compared to Baxter and DaVita, but we can see in the future, as through their investment, their financial performance overall will increase and will perform better than Baxter and DaVita in total. Now I'm gonna hand over to Keenan.
All right, so we finish up with the ratios, and let's do a SWOT analysis of Fresenius, starting with the strength of Fresenius. Since we saw from the beginning of the video that Fresenius is an old company that has lots of assets, and they had a vertical integration strategy. They didn't just stay in the dialysis business, but they also went to Kabi, equipment, planning management, and hospitals. And from this, we can see that they gain lots of advantages from it. Starting with the hospitals, they collect the data, control the information, the quality of the data. This is really helpful for their research and development. Fresenius also has global successful presence in over 100 countries. And this expansion has helped the organization to build new revenue streams and diversify the economic cycle the market operates in. And also they are market leader in their segments, and even government sometimes asks Fresenius for advice on regulations because they know more about it. What about the weaknesses of Fresenius? Vertical integration has advantages, but also has disadvantages. there are areas where Fresenius can improve, and these starts with their research and development. I mean, with the assets and the information that they have a low to and slow research and development compared to the rest of the industry. And this is also what's happening is that they need more investment in technologies, and they're not part of the vision of the company. The company is not being able to tackle some challenges, which made some losses in niche categories, and they definitely need a better feedback system for the sales team. There's also the inventory, just like we saw in the ratio, that there's really high days of inventory turnover compared to the competitors. And this can prove to be problematic on the long run. And the performance is also, since they are globally present, it depends on prevailing exchange rates and how they do, especially now with the US rate. Who knows what's going to happen? What about opportunities for Fresenius? What does the future hold for Fresenius? What can they do for the future? As we saw from the numbers as well, that Vamed has been growing recently a lot, and turnkey operation through Vamed, from basically large investment, designing, planning, constructing, operation facility, from startup to the end, could be something for Fresenius, especially now with the pandemic, that they can come up also with pandemic plans and sell it to governments, hospitals all around the world. Since also Fresenius has a stable free cash flow, which provides them the opportunity to invest also in adjacent product segments that fits to their vertical integration as well. Fresenius has also been investing in digitalization, and they want to have an online platform where they can reach more people and higher customer range, and use the data also to better segment and have better pricing with it. With opportunities, there also comes risks, and we see a huge risk for Fresenius, especially in the intensified competition. Since this is a stable profitability, there has been an increased number of players in the industry over the last years, which has put downward pressure on Fresenius, not only on profitability, but also on overall sales. And this pressure is also for increased innovation, and this increased innovation is very expensive and costly. And if it's not done right, you'd have a failed merger acquisition. And once you have a failed merger and acquisition, like we saw with Acorn a couple of years ago, this has a huge impact on the company. There's also a need for a better compliance system. Fresenius had to pay $231 million for foreign bribery charges while they were entering into 7 countries. So compliance, it's not just about reputation, it's really expensive. There's the risk of political risk as well, government regulations, what's happening. We'll dig deep more into this with what's happening now with Spain and Corona. So what does the outlook has for the future? So if you want to talk about the outlook, we definitely have to talk about COVID-19. So Fresenius released their first quarter numbers, and they showed that there is resilience to COVID-19. They saw a medical care segment. They have strong sales, especially in the US and Europe, and this is because of this little guy, saline, and other COVID-19 equipments, and they made a lot of win and revenue out of them. But on the other hand, in Kabi, they made great losses in China because the selective operation number has been reduced down a lot, and thus Kabi gets affected. Nobody wants the equipment that Kabi sells. Helios is different. In Germany, the law and the government was able to save Helios with COVID-19, but in Spain, there are many speculation whether Helios is going to be saved by the government, if they're going to reimburse them the COVID-19 costs or not. And this could be a huge risk. This could affect Fresenius on the long run as well, not just on the short run. They saw also positive currency translation in the first quarter, especially with the US dollar. But with what's happening now in the US and Corona and it might change the rest of the year. So the end of the year might look completely different, and maybe in 2 quarters the picture is gonna look completely different as well with the currency translation. Fresenius said that they're gonna maintain their original growth outlook for the future. It's gonna be medium average growth. Of course, they're gonna lower their investment. So what do other analysts say about this? Well, analysts are being optimistic about it, and Fresenius share is going